Let's keep it with the view in terms of liquidity concerns for the NBFC space. Are private market banks going to gain market share? What is the outlook when it comes to NPA recognition for banks? And what is the outlook for the sector as a whole? We have Mr. Sudhin Choksi, Managing Director at Graha Finance, now joining in to chat about that, as well as the outlook for the company and the business as a whole. Mr. Choksi, good morning and thank you for joining in. Is the housing finance growth slowing down for you post the recent NBFC liquidity crisis? What is the sense that you're getting?
I think it's a result of what happened in the third week of September. There has been a slowdown in terms of the velocity of the money which has been moving into the sector and going out of the sector. So I think that will slow down, the growth for a little while. But we expect that things to, get into a normalcy mode, probably in a couple of weeks or 3 weeks' time.
Seeing that the liquidity situation is improving, would you like to see more steps being taken? How have you read into the current steps from the Reserve Bank, etc.?
We are regulated by National Housing Bank, and National Housing Bank has extended the support during this critical period. We had received refinance from them, and they have also further sanctioned the refinance limit. So I think the NHB as a regulator has been extending fullest support to the HFCs in the current scenario.
Right. CPs form nearly 22% of your borrowings. How will your borrowing mix change? Are you likely to see easy rollovers?
I think, I think going forward there will not be much of the change as far as the borrowing mix is concerned. Maybe in a short-term period, if the appetite in the CP market is low, probably we will replace it with, market borrowing by way of non-convertible debentures, or maybe from the bank borrowings. Obviously, NHB has increased the refinance limit, so I think NHB refinance limit also would be available.
Disbursements have grown just 10% in the last first half. What's the outlook on loan growth and disbursements for the second half and FY20, if you could share that with us?
Generally, we do not give any guidance on the, growth as far as we are concerned. But we will go by as to what opportunities are available in the marketplace. We were expecting that, because of the tax concession given to the developers, the supply at the low end of the market would improve, from the third quarter of the current financial year. We have yet to see, any significant increase in the creation of a supply. So hopefully, I think by the next financial year, we should see a better supply situation, and therefore the demand opportunities would be much better.
All right. Now your NIMs have been under pressure, so give us a sense as to what the outlook is on your margins going forward as interest rates are rising and the liquidity conditions as well are tightening.
I think the margins have remained under pressure, for a while, even before this event took place. And obviously, the third quarter margins will be much more under pressure, because we all have been trying to build up the liquidity and carry excess liquidity deposit support with ourselves. And that will have a slight, drag on our spreads. But I hope the things should get back to the normal, as I mentioned earlier, in 3 weeks' time or 4 weeks' time at the outermost. So I think going forward from the fourth quarter onwards, we expect our NIM should come back to, where we have been operating.
What is the view on the real estate sector per se? Do you think that there is still stress in the system, or are you seeing a step up in recoveries?
No, I think, the real estate sector continues to be under the stressful situation, 5th year in succession. And the recent incident has put a further pressure on that. And we have been talking to a few of the developers, and it doesn't look a very rosy picture going forward.
All right, and give us a sense as to what the outlook is on the sector as a whole and some sort of a guidance in terms of your financials as well?
See, I can't talk on behalf of the sector per se, but as far as the group is concerned, we have loan asset growth in the vicinity of around 17 to 18%, and we'll continue to strive to achieve, anywhere in the vicinity of 15 to 17% for the current financial year. And if the supply situation improves from the next financial year, I think the loan asset growth could be better in the next financial year.
Very quickly, Mr. Choksey, which states are seeing slower disbursements and NPA pressure, if you could highlight that?
We are seeing, there is a pressure across all the 11 states where we have been operating.
Okay. Oh, I was looking for specific names, but even so. Thanks, Mr. Choksey, for joining us. We wish you the very best for the future.